$20,000 Bitcoin strike as deep out-of-the-money options gain traction. These flows represent a bullish bet on volatility rather than a downside hedge or outright bearish position. What to know? The $20,000 strike put option for June 2026 is notably popular, with over $191 million in notional open interest. These options are seen as bets on volatility rather than price direction, as they are too far from the current BTC spot price to serve as a hedge. Deep out of the money. OTM Bitcoin BTC $89,823.44. Put options are lighting up in longer-dated expiries as traders pick up cheap lottery tickets for potential moonshot payoffs if BTC swings wild. On leading crypto options exchange, the $20,000 strike put is the second most popular among the June 2026 expiry options, boasting a notional open interest of over $191 million. Notional open interest is the dollar value of the number of active contracts, put options, at strikes below the going market rate of BTCR, said to be OTM. These OTM puts tend to be cheaper than those near or above the spot price of BTC. The June expiry also sees significant activity in other OTM puts at $30,000, $40,000, $60,000, and $75,000 strikes. Activity in deep OTM puts is typically read as traders bracing for a price crash, but that's not necessarily the case here, as the exchange has also seen activity on highest strike calls above $200,000. Taken together, these flows represent a bullish view on long-dated volatility at low cost, rather than a bet on price direction. According to Global Head of Retail, Sidra Farik, think of it as cheap lottery tickets on a potential volatility explosion. Over the next 6 months, there is about 2,117 open interest on the $20K Bitcoin put for the June expiry. We also saw some big trades in the $30,000 put and $230,000 call strikes. The combination of these far out of the money options does not suggest directional trading, but rather deep wing trades that professionals use to trade long-dated volatility cheaply and adjust tail risk in their books. Farik told CoinDesk. She explained that it's essentially volatility positioning, not price positioning, because the $20,000 put or the $230,000 call are simply too far from the spot price to be a purely protective hedge. As of writing, BTC changed hands near $90,500. According to CoinDesk data, those holding both OTM calls and puts could score asymmetric payoffs from extreme volatility or wild price swings in either direction. But if markets stay flat, these options quickly lose value. Options are derivative contracts that give the purchaser the right to buy or sell the underlying asset at a predetermined price at a later date. A put option provides the right to sell and represents a bearish bet on the market. A call offers the right to buy.
What to know? As of October 2025, Go Plus has generated $4.7 million in total revenue across its product lines. The Go Plus app is the primary revenue driver, contributing 2.5M, approx. 50%, followed by the Safe Token protocol at $1.7 million. Go Plus Intelligence's token security. API averaged 717 million monthly calls year-to-date in 2025, with a peak of nearly 1 billion calls in February 2025 total. Blockchain-level requests, including transaction simulations, averaged an additional 350 million per month. Since its January 2025 launch, the $GPS token has registered over $5 billion in total spot volume and $10 billion in derivatives volume in 2025. Monthly spot volume peaked in March 2025 at over $1.1 billion, while derivatives volume peaked the same month at over $4 billion. Dogecoin holds 0.14 floor as network activity hits 3-month high. Rising active addresses and tightening volatility indicate an impending directional move, with 16 cents as a critical breakout threshold. What to know? Dogecoin marked its 12th anniversary, but market reactions were muted, focusing instead on technical patterns and network activity. The token consolidated within a tight range, with active buying interest at the lower boundary and potential for a bullish breakout. Rising active addresses and tightening volatility indicate an impending directional move, with 0.16 as a critical breakout threshold. Meme coin posts modest advance with elevated trading activity while technical pattern signal consolidation near key support. News background: Dogecoin marked its 12th anniversary on December 6, 12 years after creators Billy Marcus and Jackson Palmer introduced the meme token that would later evolve into a major crypto asset supported by persistent community engagement. Despite the milestone, the market reaction was muted, with trading driven instead by technical structure and network activity. On-chain data showed daily active addresses reaching 67,511 on December 3rd, the second highest level in 3 months, underscoring renewed user participation even as price action remains contained. Technical analysis: Doge spent the session consolidating within a tight 0.1406-0.1450 band, forming a compression structure designed to resolve into a broader move. The token bounced from 14 cent support 3 separate times, showing active buying interest at the lower boundary of the range. Each rejection of deeper downside came with declining sell volume, a constructive signal for potential upside resolution. Hourly charts revealed a notable volatility pocket around 0.319.22 GMT, where price dipped to $0.1405 before recovering, reinforcing an ascending intraday support line. MAC curves continue to converge toward a bullish cross, while range contraction is higher. Lows hint at an early stage accumulation pattern rather than distribution.
Action summary: Doge advanced from $0.1405 to $0.1455 in a controlled 0.81% gain. Volume jumped 16.96% above weekly averages, with a notable 465.9 M. Spike plus 68% versus 24-hour SMA at 1 o'clock GMT, confirming institutional interest around range lows. The token maintained stable structure despite multiple tests of $0.140.1 for $1, while resistance at $0.145 remained unchallenged during the session. What traders should know: the consolidation setup is nearing resolution, with 16 cents identified as the critical breakout threshold that would transition Doge from range-bound action into a trend continuation phase. Failure to hold $0.1 for risk, sending price toward deeper on-chain support near $0.081 as flagged by UTXO realized distribution clusters. The combination of rising active addresses and tightening volatility suggests a directional move is approaching. Traders should watch for volume expansion above $0.145 or below $0.140 as the likely trigger for the next leg.